Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hey, some headlines out of China today. Chinese
right?
President Xi Jinping and Russian leader Vladimir Putin pledged to intensify cooperation against U.S., quote, containment of their countries as they warned of growing nuclear tensions between rival powers. And then the Financial Times, a little earlier in the day, reported that U.S. Secretary of Defense Lloyd Austin will meet with China Defense Minister Dong Jun at the end of May during the Shangri-La Dialogue Defense Summit in Singapore.
And then today we had some comments from JP Morgan Chair and CEO Jamie Dimon. He called for full and thoughtful engagement with the country, China, as President Biden earlier this week, as you know, imposed sweeping tariffs on a range of Chinese imports. So lots of news connected to China. So our timing couldn't be better when it comes to our next guest.
Christopher Marquis is professor of Chinese management at the University of Cambridge. His most recent book is The Profiteers, How Business Privatizes Profits and Socializes Costs. He's also the author of other books, including Mao and Markets, The Communist Roots of Chinese Enterprise. He joins us from Los Angeles. Professor, good to have you back with us. We got a good chunk of time with you, so we're going to get to your new book in a few minutes. But since we have you, you've done a good portion of your own research on how Western leaders can better work with China when it comes to business and politics. We got to start there, just given all of these headlines. So I'm wondering, as somebody who's written a book on how politicians and business leaders should engage, Western politicians and business leaders should engage with leaders and their counterparts in China, what do you make of the tension that we're seeing between the two superpowers right now?
Yeah, I mean, I think it's somewhat inevitable, unfortunately. I think that the U.S. in the last, number of years has really reversed course from what I think was a very sort of wishful and hopeful thinking that China was going to liberalize, and has taken a much tougher stance, which I think is much more appropriate. I think that when the U.S. is taking a tougher stance, the Chinese are going to sort of react we sort of react reciprocally. So I think that it's going to be a very difficult balancing act because I think that the national security concerns from the U.S. side are very, very serious and substantial, and that we need to be, very, 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 very tough and rigorous in many ways.
I am curious if you think, that if global companies like Bottom Line are really rethinking their Chinese exposure and opportunities. I feel like I get mixed messages. I feel like, we hear this pushback against globalization, and we see the conflict between the U.S. and China continue to grow. And yet, you still see a lot of companies, they're not necessarily shutting down their shops in China. So help me make some sense out of it for our audience. What really is going on?
Well, it sounds like you have made some good sense of it already. I mean, I think mixed messages is a pretty good characterization of it. The thing is that business, without a doubt, wants exposure to the China market where they can. I think Xi Jinping was in San Francisco maybe 6 months ago, and he got 3 standing ovations from the U.S. business community. I think that the more and more that companies can sell their products in China, I think just helps the bottom line. But there is a real long-term risk. It's sort of like, the children's game, sort of where you're walking around and they make you stop and there's one less chair each time.
Musical chairs.
Yeah.
At some point, thank you. Yeah, that name didn't come to me immediately. But yeah, it's like musical chairs. At some point, the music's going to stop. And, I think this is why long-term many companies are, moving their supply chain, trying to move their supply chains out of China. But the challenge is, where to go with a situation where, for the last 30 years, China has built this incredible supply chain infrastructure, and has amazing, human capital, has incredible, facilities, and no other place has the scale. So I think that, over time, business is going to be guardedly moving away where they can because of this risk that I think that the political establishment is also starting sort of come to grips with, so I do think it's mixed right now, but I think long term, even when they're applauding Xi Jinping, that they're planning ways to lessen the exposure and risk.
Yeah, it's delicate. Having said that, and forgive me if I throw you something and you're like, okay, I don't really have any thoughts on that, although I'm sure you have thoughts on lots
Okay.
of things. But India, is India looking to be kind of the replacement for China for
Oh, I think that definitely. I mean, I think that, I mean, the issue is that, I think infrastructure wise, India is just not there.
yeah.
I mean, China, again, it's just incredible. I mean, I've spent, lots of time in Chinese factories in southern China, and I just, the sort of amazement and admiration for how businesses there have built these incredible infrastructures to manufacture. And I think that, this includes, labor, being able to move labor around the country effectively, which the government is able to do, sort of clusters in places where, a lot of the different intermediate or sort of backward supply chain items are sourced very closely and have close relationships. So, it's a huge challenge to think of moving out of China. And I think, India or, Vietnam is another country that's talked about a lot. There, I think the government's working to try to build up, the infrastructure and ways to try to actually, make products to the extent that China can. But it's a long-term investment that needs to be done. It's not just, you can't just throw money at it, because it takes a lot of sort of expertise, takes a lot of physical infrastructure. So it's not something that can be sort of turned around overnight.
Speaking of something that can't be turned around overnight, I'm wondering what your view is of the Chinese consumer right now, given that, like you said, 6 months ago in San Francisco, it was tough to get a ticket as a business leader to that
Right.
dinner with Xi Jinping. I mean, it was like anybody in the business community who's anybody was there and wanted a ticket to that dinner. No question that those folks want access to that market. But how is the footing of the Chinese consumer right now?
Yeah, I mean, there's been a lot of reporting that, there's economic issues, increasing economic issues in China. An issue is that, China has been trying for, I don't know, 15 years now to really get more and more consumption going, because so much of the Chinese growth story has been on investment in infrastructure, and infrastructure in China is totally saturated and overbuilt. And so to try to generate consumer demand or sort of consumer spending. However, the Chinese people are not confident in I think the future of the government. I think that COVID probably played a big role, was a big hit to the confidence that even existed. So I think that the economic issues that China has been experiencing are not going to get any better. I think that, Xi Jinping, for the first part of his, time in office, was coasting on the sort of tailwinds of prior leaders, sort of economic policies, and that, you look at the things he's doing, cracking down on all these incredible businesses and industries and technology, education, e-commerce. Also, there's huge youth unemployment. They actually stopped reporting the numbers. I mean, this is the kind of thing that is really worrying, not just the fact of it, but the fact that, oh, this doesn't make us look good, so we're just going to stop reporting on it. All of the different databases they've actually, that sort of provide economic information for due diligence, they've shut off.
Let's get back to our guest. Christopher Marquis is with us, still with us, professor of Chinese management at the University of Cambridge, written many books, including one on how businesses can do good. That was entitled Better Business, How the B Corp Movement is Remaking Capitalism. His most recent book, The Profiteers, How Business Privatizes Profits and Socializes Costs. That's something we want to drill down a little bit more into. Chris, thank you so much for staying with us. I got to say, I was looking at the chapters. First of all, this book kind of speaks to us in a big way, but it says, okay, you ask some questions. Who pays for carbon emissions? Who pays for damage to the earth? Who pays for cheap goods? Who pays for cheap labor and inequality? Who pays for systemic discrimination? Kind of interesting, too, when you talk about cheap labor, because we just did a story about prison labor that companies use, and some of the alleged injustices that seem to be going on. It's a great story by our Bloomberg Businessweek team. But so who pays for all of this, that list that I just walked through?
Sure. So it's it's the general public and individuals. The book I focus on this topic externalities, which is around which is sort of a wonky term, but basically, it's encapsulated in the subtitle of the book, how business privatizes profit and socializes cost. And the thing is, there's been, decades, probably more than that, of sort of in some ways misinformation campaigns on the part of companies where a lot of the things that perhaps they should be covering the cost for actually get sort of borne by the general public. And a quick example of that is carbon emissions. I think people are now coming around to understand that actually, being able to use the sort of sky as a free, landfill for a company's pollution, isn't really fair because it's creating a lot of health and environmental damages. And now, through carbon taxes, carbon markets, companies are starting to pay for that. But this is a widespread problem, which is what I try to really examine in the book.
Christopher, I want to ask you this question because you've written a book about B corporations as well. So I'm wondering
Yes.
if there's a better system out there than the system that we currently have. The system Carol and I acknowledge all the time, capitalism isn't perfect, but it's the system that we have. And I think a lot of people would argue that it is the best system out there, with all its flaws.
Sure. Yeah. I mean, I think the thing is that, I think it's easy to use these terms, sort of capitalism, socialism, which are ideal types in some ways, but really we have elements of capitalism, elements of socialism in the US, in the UK, even except for probably North Korea, even countries like China, which is run by the Chinese Communist Party, has huge amounts of market economy and capitalist activity. So I think, to me, it's more about how sort of economic policy and fairness in many ways gets executed. And so, companies around carbon emissions, you think about what's sort of free or fair for the market. Is it right to have a market whereby companies are creating a lot of damage in the world, not having to pay for this damage, and it gets borne by the general society? If you think about it on the individual level, it's you wouldn't necessarily throw trash on your neighbor's lawn or do. I mean basically that's sort of what the analogy is at the individual level. So I think we really need to think about how best to sort of identify solutions to keep companies accountable for the damage they're creating. And then, I think that's, and that could be certainly within a capitalist system.
Well, that gives me hope. So let's get into it. Because, it's funny, reading
Sure.
through this regenerative paradigm. So tell me exactly
Yes.
what that means. We talk about regenerative and we talk about farming a lot when it comes to things like
Yeah,
that.
sure.
So
Exactly.
So is it the same kind of idea, or tell us about that?
Sure. So yeah. So towards the end of the book, thank you for picking up on that part too. I really try to outline a lot of the different solutions that are helpful to try to actually keep companies to account. And there's not sort of one silver bullet. It's actually, we need to do many things across policy, markets, companies working together, individuals. But I really do identify ideas around regeneration that have been taking hold in the business world. And I think that the analogy to agriculture is right on target. This is the idea, basically, maybe I'll just sort of define it a bit. So we've been talking for ages about sustainability, UN Sustainable Development Goals, but really sustainability is about sort of doing less harm, mitigating harm. It's about the term sustain means sort of keep things the same or maintain them. So regeneration, as many companies are thinking about it now, is how can business models, production systems, agricultural systems be designed so that they don't just mitigate harm, but actually create positive benefit for the broader, society. And so, this is where, I really have a number of case studies, and there's really no regenerative business yet. Maybe there never will be, but as a goal for these organizations where they're thinking about, how can we not just be about mitigating harm in our production, but actually help.
Right. Like to have that as a mission. I get it. I still always have a hard time, and Tim and I talk about this all the time, that, as long as you're a publicly held entity, you're going to have folks like Tim and me and all of the Bloomberg team that are saying, all right, great, you were great for society, but man, you missed your numbers in a big way and investors are bailing. So I wonder
we don't even talk about society benefits. All we talk about is the numbers.
Exactly. So I think about who was it that said a few years ago, this whole idea of all stakeholders we have to think about in running our entities.
The Business Roundtable.
Right. Yeah. Was it? I can't remember. It was Larry Finker. I can't remember who it is, and forgive me but we all talked about it a million times, but here we are. So help me out.
Yes. Sure. So, I think that, investors are a big issue in this whole setup. I think, there's actually been some investigations, I think perhaps even one by Bloomberg, about companies that signed on to the Business Roundtable statement, talk about stakeholders, but turns out, things like, there are more carbon emissions, more environmental fractions. So, that seemed to be a pretty sophisticated form of greenwashing, really just trying to actually maybe avoid future regulation. But I think that, there is increasing interest in investors on trying to mitigate externalities. There's this new phenomena called universal ownership, which, maybe a future segment we can talk about that. It's somewhat complex, and I think it'd be good to get some investors on as well. But I think part of the, what I try to emphasize in the book is that, there's actually been a decline in the number of public companies over the past number of decades. Actually, the number of public companies, is a small number of the overall businesses in the world. Mm-hmm. And I think that, what we as, government leaders, consumers, investors ourselves expect of companies, I think that, we should be, building out that infrastructure and trying to get the investors to come along too. But I think there'll be a slower, go ahead.
Well, and one thing I was thinking of, like all the private money, whether it's equity or private credit, right? Everybody's talking about it. Everybody's doing it. Part of me wonders about, okay, what is the future of the public markets, to be quite honest? But at the same time, I don't know, is the private credit money area doing it better?
Yeah, I certainly I think that on the private equity side, perhaps not. I'm not as familiar with the with the credit markets, sort of private credit markets, and clearly, business has to have some capital to sort of grow and scale. So there needs to be some investment certainly, but I do think that a lot of the actually policy focus in the EU, you might have covered this in some other stories, but it's actually going to be pretty significant effect on global companies, not just companies that are in the EU. And I think that is an area that will get some traction on some of these ideas. I think this universal ownership idea that I mentioned, and again, sort of it might be a little complicated to talk about in detail. I think there's a lot of businesses working together. So, this idea of regeneration that we talked about. So, a lot of companies have actually banded together to try to create sort of infrastructure in markets to sort of lower cost to make that happen. So, so that's a few of the things we talk about.
We would love to continue the conversation. And I think you said universal capitalism, right? Is what you were talking about earlier?
It's called universal ownership.
Okay, so let's try and continue this going forward, because I would love to hear a little bit more about it. And I think this is something, as we try to figure out a different way forward, is really productive. Christopher, thank you so much. Really appreciate it. And thanks for finding time for us. Christopher Marquis, he's professor of Chinese management at the University of Cambridge. His latest book, The Profiteers, How Business Privatizes Profits and Socializes Costs.